I don't grow on trees, but I grow when saved but on in lockers. So, to what extent I grow depends on the perspective of who sees it. You have seen the earlier video on time value of money and the present and future value. So, you would already have guessed if you had seen the earlier video on the sapling is nothing but the present value and the tree is nothing but the future value. But, however, the extent to which it grows depends on the perspective, which means it is the discount rate or the rate which the investor expects from the investment, depending on which the person could perceive that it has grown to this extent. Okay, so I welcome you all to my channel, and in today's topic we are going to know about discount rate, and this is part of the financial management series which I have been posting. Today we are going to exclusively see about what is discount rate. Discount rate is nothing but the rate of return which the investor expects from the investment. So that is the perspective of that is what I meant by the perspective of who invested. So the rate could differ differently depending on who invested and what is the intention behind the investment. So when we look into the discount rate, two key major factors which we need to consider is the intention of the investor, whether the investor wants to keep his money safe, whether the investor wants to grow the money or he wants to create wealth, right? So depending on these three intentions, the discount rate of the investor would be different. Why? What is the reason? It is because the discount rate, that is the rate of return, is closely related to the risk that the investor takes. What is the extent of risk the investor is ready to take is directly proportional to the return which the investor gets from the investment, which we call it as risk return trade-off. So the more the return, that means you need to take greater risk. So if you are not a risk taker, then lesser the return, then lesser the risk you take, lesser would be the return which you would get from that particular investment, which is what we call it as risk return trade-off. So the extent to which the money has grown depends obviously on the perspective of the investor or the rate of return which the investor expects from that particular investment. Next we move on about assessing the risk appetite of the investor. So in order to assess the risk appetite, which means the extent to which the investor is ready to take, these are the four key major points which we need to consider in order to assess what is the risk appetite of the particular investor. If a person is hungry, then what do we understand by the term appetite? Appetite means the extent to which a person has the potential to have food. What is the food appetite? It means to what extent he is usually being able to digest, his body is able to digest this quantum of food that the body can easily digest, is what we call it as food appetite. Similarly, risk appetite, the extent to which a particular investor is ready to take or is okay for being taking such a risk, or he has the potential to take the risk. So in order to assess the risk appetite of an investor, we need to consider the age of the investor. When we say age, that means the lower the age or the younger the investor is, then he has a potential to take a comparatively greater amount of risk because he has the age in him. So even if there are any losses, that could be covered by putting efforts, right? So he has the timeline is always favorable for him. So that's why lesser or younger the age of the investor is, then he has the potential to take a greater amount of risk. However, there could be some person who are risk averse, so who is not ready to take risk willingly or voluntarily. He is not proactive to take risk. Whether a person is very anxious when the topic comes about markets and the market fluctuations, then in such case it is better to avoid or stay away from taking risk and go ahead with comparatively less riskier instruments in the less riskier instruments in the market. So there are options for that as well. Next is the time horizon. What is the intention? When I say the time horizon, it means what is the intention of the investment, whether it is a short term investment or whether it is a long term investment. So depending on that as well, the risk appetite varies. If it is a short term investment, you want to invest in a short period of time, you wish to get a greater amount of return, then the risk is higher, because in a shorter period of time you can predict to some extent, but you cannot accurately predict, and there are possibilities of fluctuations to happen, and you may not end up having a desired return from the investment. So your risk is obviously higher, so higher would be the return, but however there is a greater risk attached to it. So if the risk appetite of an individual is not that much, okay, so he need to go in for a long term investment instead of looking for a short term gain. So that is the time horizon. Fourth is the financial knowledge. So any investor, when you go into investing in markets or in shares or in any instrument, it is a prerequisite to have the financial knowledge on how that particular operates, to be aware of the risks involved in that particular instrument. So this financial knowledge is very essential when you want to proceed ahead with going for any investment. So these are the, depending on the financial knowledge of how a particular instrument of a particular share operates. Of, for example, if you see in the markets as well, when we compare, there are mutual funds, there are shares. There are shares, when I say, like initial public offers, which where the shares are being issued for the public. There are index indexed stocks. So there are intraday trading, right? So depending on the risk or the awareness of a particular market, an individual can invest. If a person who is not aware of how a share or how does the market operate, and he blindly goes into and invests in the market, then that is called as, like, it is like a gambling. So without financial knowledge, one should stay away from taking any kind of risk by investing in the markets. So these are the four prerequisites. You need to know where do you stand. What is the age of the investor? So once again, to revisit, what is the age of the investor? Whether the investor is risk averse or is ready to take risk, whether he would wait when the share price fall, or he would be very proactive, that is, he would panic when the prices fall and immediately he wants to exit out of the market. What is the time horizon? Whether it is an investment with an intention to gain some returns in a short term or long term. Depending on that, your risk would vary. Whether you have the appetite to take that much risk, and whether you have the financial knowledge of particular instrument in which you are investing. These are the four points which you need to consider in order to assess what is your risk appetite. Investors, based on their risk appetite, are generally classified as those who are risk averse, or who are not willing to take much risk. That means they are having a low risk profile, who are called as conservatives. Those who have moderate or medium risk takers, those investors are called as moderate, and those who are ready to take high risks. That means when they are ready to take higher risks, that means they have the potential to provide for the losses. That's why they are high risk takers. They are okay. So when you are going to take high risk, we will be discussing on how you can, even for a high risk, how you can provide for your losses, but you should have a plan when you are going in for a higher risk profile. So any investor who is ready to take a higher risk are called as aggressive investors. So I hope in this today's video you were able to understand on what is the discount rate and what is that is the perspective of who invests it. What are the prerequisites you need to consider in order to um, understand before going into markets, and how do you assess your risk appetite. And we also learned about the various types of investors. Comment below on which kind of investor you are. Are you a conservative investor, moderate, or an aggressive investor? I will see you soon in the next video in order to explain you more about the risks and the returns which is related to the portfolio. And if you found this topic interesting, press the like button and do subscribe to my channel for more videos which I will be uploading in the financial management series. Thank you.